Good morning. It's Friday morning. Uh, Welcome to StockMarketFunding.com. We did a lot of trading yesterday, like we always do. And basically, what we're going to be doing here is talking about bear and bull. And as we had traveled up on like the Amazon, the Goldman Sachs here, the Apple, which was quite normal yesterday, and it ran up and made its highs of 230.97 and then fell all the way back to close at 226.65. And that means that the bears were not getting squeezed totally out of the equity. But let's talk about Goldman Sachs recap yesterday when we traded it. We went straight up to 178.90 and some change, and we fell $4 off that high. And once again, what I want people to know is it wasn't until late in the day. Let's visit Google. Google went straight up to 572 yesterday and fell $10 off the high. The most heavily short squeezed equity yesterday was the Amazon.com trade. Went up to 136.91, came back to 135.37, had refused to break, broke back up, had double tops and then reversals late in day. And basically what we will do is we will use our SMF mathematical formats and we'll start doing those trades. Now, on Apple today is going to be different than yesterday. So we would like to trade Apple, and we'll have the people here do a half delta down, quarter delta down in the mathematical table, and same thing to the upside. What we might look at is that the short sellers got heavily on Apple. Apple gave all its gains up. That's almost a $4 drop late in the day. So the bulls are putting a bull raid on the bears. And hedge fund managers remain heavily short these markets. And as they climb up higher, it's a mechanical thing. It's a mechanical trade. And basically, all I've heard this morning on CNBC is, how are we going to get the bears out? How are we going to get the bears out? So, this kind of mentality runs over into the other types of people. Do they really even understand what's going on as far as the real tape? No, but just the talk. Whoa, boy, how are we going to squeeze out all these bears? Well, big hedge fund players have been short the market. And we have had lower volatility, but yesterday's key focus was volume action. And the volume action yesterday was higher than normal days. And once the shorts got out of these names or had covered a piece, that's when late in the day, it took most of the day to get the shorts out. And every time that stocks pulled back, up they went. They pulled back, up they went. And that momentum was very strong. So what I want people to say is that the bull raid remains, and now I'm hearing talk all over TV. Got to get the bears out. Got to get the bears out. Well, hey, those people don't know what they're talking about. We pointed this out a couple of weeks ago when we called the bottom. It'll be 7 weeks, I think, today. And basically, we've climbed higher and higher and higher. And I want to show something on the Dow. I don't have any numbers in here, but we came up to that 10,900 right below that 11,000. We hit that, we didn't hit the 1190 yet on the S&P. And as soon as we got up there, we started to fade back. Once the short sellers had been squeezed, then the buyer, the organic natural equity buyer, was not there to support the actual end equity price. Meaning that once they propelled it and everyone bought to cover, after that buy to cover during most of the trading session was out of the way, all of a sudden, guess what? the bears were not being raided by the bulls, but then the natural buyer did not step in to support the higher equity prices, and then they fell down. So it's all about the last hour of trade. And we'll see what the bear bull raid against bear. You know, what I want people to really know on the tape is that it's a mechanical thing, is to get the shorts out of the market. When the short interest starts to come off, that's when you would be putting in a top. If the short interest comes off intraday, there must be buyers there. And if there isn't going to be any buyers after the short cover late in the day, then we'll start shorting stocks and we'll wait till that time frame. Because what we do know is by example of the tape. And the tape clearly showed, just like I've been teaching people here, is that when the short sellers are out, there's got to be the real buyers there to be chasing these stocks. And I didn't see that yesterday. So it's a mechanical trade.